Novo Nordisk once looked pretty much unstoppable, right? I mean, they are the absolute powerhouse behind household names like Ozempic, Wegovy, and Rybelsus. We're talking tens of billions of dollars in revenue. But then, virtually overnight, their stock just suffered this brutal reset. It's a really fascinating paradox because, sales are still growing. Global demand for GLP-1 medicines is absolutely off the charts, and yet investors are suddenly slamming on the brakes. So today, we're going to unpack exactly why that's happening. We're going to dig straight into the raw data and the rising threats that currently have Wall Street so on edge.
Here is our roadmap for today's explainer: the GLP-1 revolution, beneath the Q2 numbers, pricing pressures and competition, pipeline risks and catalysts, and finally, the investment verdict.
Because really, the core question right now is simply this: can Novo Nordisk actually maintain its dominance? The competition out there is absolutely not waiting around, and this weight loss drug market is moving at lightning speed. To figure out if Novo can hold on to its crown, we really have to understand what they are actually up against.
Let's kick things off with Section 1, the GLP-1 revolution. It's a massive market, but the narrative is definitely shifting.
Just to wrap your head around the sheer scale of what we're analyzing today, think about this number for a second. $204.73 billion. That is the massive market cap for their over-the-counter stock, ticker symbol NNOF. I mean, with roughly 66,700 employees across 170 countries and trailing 12-month revenues topping $50 billion, Novo is literally a colossus. But being a giant also means you got a giant target on your back.
Okay, let's dive into this. There is a massive, fundamental tug-of-war happening with this stock right now. On one side, the bull case is straightforward and honestly super compelling. Obesity is a huge global health problem, GLP-1 volumes are growing, they have new formulations coming, and they're utilizing AI and R&D. Basically, more patients mean more prescriptions and higher revenue. But then, look at the bear case fighting back. You've got intense pricing pressure, fierce competition from Eli Lilly, incredibly complicated US rebates, and the harsh reality of pipeline failures. It's this intense battle between soaring demand and emerging, very real threats.
That brings us to Section 2, beneath the Q2 numbers. Let's pivot from the big picture and look at the gritty reality of that Q2 2026 data that dropped on August 4th.
If we kind of peel the onion on their latest sales data, there's a really interesting discrepancy. When you look at the reported comparison, sales only grew by 3% at constant exchange rates, but adjusted sales grew by 7%. So what's with the BAB? Well, Novo noted that the reported comparison was dragged down by an accounting adjustment, specifically a reversal of a US government drug pricing rebate valued at 2.6 billion Danish kroner. That little accounting quirk essentially masked the true 7% underlying volume growth the company actually saw across geographies.
Now, take a close look at the operating profit. At first glance, a 16% drop looks, well, pretty terrifying. But don't hit the panic button just yet. That reported drop was largely due to a massive non-cash impairment charge, which is essentially a write-off related to a drug trial. When you strip that charge out, the underlying adjusted operating profit actually grew by 11% at constant exchange rates. So the core business performance actually improved.
And because of that underlying strength, on August 4th, Novo actually raised its 2026 outlook. They shifted from a pretty bleak forecast of -4% to -12%, up to a new outlook of 0% to -6% for both adjusted sales and profit. That's a huge step up. But, and this is a really big but, they are still guiding for possible negative growth. Even at the absolute top end, they're only hitting 0%. So it just highlights why, despite all the hype out there, this is absolutely not a no-risk investment.
Moving on to Section 3, pricing pressures and competition. This right here is the core battle of volume versus price.
The US market is Novo's most critical battleground, and they are facing an absolute gauntlet of headwinds there right now. We're talking reimbursement hurdles, shifting government pricing policies, incredibly strict insurance coverage limits, complex rebate structures, rising direct competition, and a flood of compounded products. The big takeaway here is that just selling more prescriptions doesn't automatically mean proportional revenue growth. Actually, back in Q1 of 2026, adjusted sales, excluding that 340B provision reversal we talked about, they actually fell 4% despite GLP-1 volume growth. And that was specifically because of lower realized prices.
One of those major headwinds is unauthorized competition. It turns out, when a drug is this popular, everyone tries to create a knockoff. Just recently, on August 5th, Novo announced the Dutch court granted a preliminary injunction against a company called Semavan. Samovan was making an unapproved compounded semaglutide nasal spray, which Novo argued infringed on its intellectual property. Novo is super clear on this. Their approved medicines like Wegovy, Ozempic, and Rybelsus do not include any approved nasal spray format. This legal battle matters heavily because these unauthorized compounded versions threaten branded demand and severely undermine Novo's overall pricing power.
And then, of course, there is the Eli Lilly problem. Novo does not operate in a vacuum. The battlefield with Eli Lilly spans across multiple fronts: weight loss efficacy, diabetes management, dosing convenience, the race for oral medicines, pricing, and clinical outcomes. Now, the global obesity market is vast enough to easily reward two winners. But if Eli Lilly captures a disproportionate amount of future growth, say through better pricing or clinical outcomes, Novo's valuation could be permanently suppressed.
Section 4. Pipeline Risks and Catalysts. We need to weigh high-tech hopes against the brutal realities of drug development. And this brilliantly illustrates the duality of pharmaceutical investing. On one side, we have a fantastic long-term catalyst. On August 10, 2026, Novo announced a strategic partnership with Amazon Web Services to use AI for faster, optimized drug discovery. I mean, that's the dream, right? But then, here's the reality check right next to it. Just days prior, on July 31st, Novo announced that their Phase 3 Zeus trial of ziltivekimab failed to show a reduction in major adverse cardiovascular events compared to a placebo. It yielded a hazard ratio of 0.99. In plain English, that means it performed basically no differently than a sugar pill. This failure is just a stark reminder that you can never value a pharma company solely on its current hits. The pipeline matters, and pipelines can fail.
Which brings us to our final section, the final investment verdict. It is time to synthesize all these clashing data points into a clear, objective framework.
Think of this financial scorecard as a clash of titans. In the green corner, you have roaring GLP-1 volumes, solid adjusted Q2 sales at plus 7%, and strong adjusted operating profit at plus 11%. You even have the dividend as a nice positive, though at a roughly 2.78% yield, it's really more of a bonus, not the core thesis. But in the red corner, fighting back hard, is intense pricing pressure, high competition, a mixed pipeline, and a 2026 outlook that still flirts with negative territory. Because of these clashing factors, the overall risk rating lands at medium-high. While demand is incredible and the company's balance sheet remains remarkably strong, investors need to pay close attention to the red zones, specifically the nuances of over-the-counter trading liquidity for the NONOF ticker, meaning how easy it is to actually buy and sell those shares without huge price swings, combined with U.S. pricing pressure and fierce competition. Those represent major red flags for anyone holding or looking to buy.
So how does this actually build into a strategy? The analyst outlines a buy-on-weakness approach. You're basically hunting for an asymmetric opportunity where falling expectations meet improving fundamentals. That means waiting for the stock to remain below previous highs while confirming that GLP-1 volumes are still rising, corporate guidance stabilizes, and the pricing pressure proves to be manageable rather than catastrophic. If the obesity market continues expanding and the pipeline produces positive results, a depressed valuation becomes very, very attractive.
Conversely, we have to look out for the stark warning signs that would trigger a sell or reduce rating. The absolute most dangerous scenario is a structural breakdown. If GLP-1 volume growth suddenly collapses, while pricing declines actually accelerate, and management is forced to cut guidance again, that's a huge problem. If you see market share falling materially to Eli Lilly or pipeline failures multiplying, the fundamental thesis weakens dramatically.
So, the crucial point is captured right here in the final verdict. Novo Nordisk scores an 8.8 out of 10 overall. The official stance is buy on weakness or hold. If you are an investor, your job right now is to relentlessly watch pricing metrics, the U.S. reimbursement landscape, and that Eli Lilly competition. And you'll definitely want to mark your calendars for their upcoming Capital Markets Day on September 21st, 2026, which should provide vital updates on these exact fronts.
I want to leave you with this final thought from the source material, which I think just synthesizes the entire situation perfectly. Novo doesn't need to dominate every obesity patient in the world. It needs to prove that rising GLP-1 volumes can overcome lower prices, tougher competition, and the failures that inevitably come with pharmaceutical R&D. Novo Nordisk isn't the same stock investors were blindly buying at the peak of the GLP-1 frenzy. The story is a lot more complex now, but arguably, it's much more fascinating. The ultimate question you have to ask yourself is this: can Novo Nordisk out-innovate the inevitable collapse of its own pricing power? Thanks for joining this explainer. Let us know what you think.